Hey everybody, my name is Matthewtcpa. I'm a certified public accountant. My firm is based in Long Island, New York, and in today's video we are going to discuss how the American consumer is broke. They've been flocking to McDonald's over their $5 special meal, or a value meal for that matter. We're going to also discuss other companies that have had to do similar things, including Burger King, Starbucks, Wendy's. Actually, Wendy's is now offering a $1 breakfast, which is apparently chicken on a biscuit with maple syrup and cheese or something, which, I mean, for $1 is just gross. Like, what in the world could be humanly going into it unless it's just a flat-out loss leader, which is what I would hope it would be, because if food today costs $1, that's just a scary proposition to me. If you're into economics, finance, making money, the stock market, things of that nature, please be sure to like, comment, and subscribe. And, I would be remiss to not mention Joe Biden dropping out of the presidential race. I generally don't do politics. Apparently, he released a statement via Twitter. You would think he'd have the respect to come out and do it through a press conference, but unfortunately, I don't even think Joe Biden knows whether he actually is in the race, dropped out of the race, or is president for that matter. So that leads us to the next issue, which is the economy is basically in the craps. It's been in the craps. COVID just really spiked it way, way up and made it go way, way down further, which is where we're at now. And all the stimulus and the printing of the money supply, 40% of it, which is now in circulation, was from 2019 through 2022. It's propped up the stock market, but everyday Americans are feeling it. And I don't know how much longer they can continue to kick the can down the road, for that matter. So whether it would have been Joe Biden, whether it's President Trump, or now it looks like Kamala Harris, at some point the dog dude's going to hit the fan, and it's going to get very bad. Anyway, I actually filmed another video about McDonald's releasing their $5 on their earnings, actually, when they missed it, and how they planned on introducing a $5 meal to woo customers back. I also did analysis if I thought whether it was greedflation or inflation, which, you just look at their gross margins, and their gross margins have done nothing but going up substantially. So yes, a business is in business to make money and enrich their shareholders, and so they're doing their job, but at some point you got to say how much of it is really necessary to charge a $20, it's supposed to be cheap food, fast food. $20 is now like you're going to Applebee's and it's, I don't know, middle class food instead of low class food. And I'm not saying that by class, I'm just saying that by an analysis or an analogy, for that matter. So anyway, about 93% of McDonald's have committed to selling the bundle past the initial 4-week window that started June 25th, according to a memo seen by Bloomberg News. Early performance indicates the meal deal is meeting the objective of driving guests back to our restaurants, right? So the good thing about having customers come to your restaurant is, yes, they're going to probably come in and spend $5 on a footlong, but they're going to come back and they're going to add on other stuff. Or while they're there buying the $5, not the footlong, I'm sorry, that would be Subway. While they're buying their $5 value meal, they're going to add on a milkshake, or they're going to add on, an extra burger or extra large fries. And it also prevents them from going to their competitors, right? So it's not just that they're selling the $5 meals, they're selling other auxiliary products with it. And, McDonald's abrupt shift to debut a meal deal about 1 month ago directly responded to cash-strapped consumers pressured by elevated inflation and high interest rates. Now, elevated inflation, they said we had 9% inflation at the height of it during the pandemic. I think if you easily double those numbers that the government comes out with, that might give you a real number. I'm inclined to say that we had hyperinflation. Nobody will ever admit it in the government, but anybody with common sense and everyday Americans absolutely know it and see it. Just if you're a contractor, the cost of wood went up through the roof. The cost of insulation tripled, almost quadrupled for that matter. food soared through the roof, everything, labor's gone up. So there's been massive inflation in terms of prices rising, but really what causes inflation, or what is the true definition of inflation, is the printing of the money supply. And yes, we have higher interest rates now to combat that, quote, high inflation, which has now resulted in a whole other bunch of effects, but we actually need higher interest rates. And I know that's going to sound crazy, but to truly bring down inflation to where it should be, that's what we need. Anyway, McDonald's move to extend the deal through the end of the year shows executives at the burger chain and understand the consumer slowdown will persist. According to Bloomberg, McDonald's is looking to bolster its affordability plans through the rest of the year. According to the memo, according to the potential to extend the current meal deal for an even longer period. That's huge, right? And that says a lot. It has also looked at extended hours of operation to capture demand during off-peak hours. So again, I'm sure they've done their account analysis. They know the deal. But this goes to a basic analogy of, why does the Federal Reserve want 2% inflation, right? Do you want to spend $20 on a value meal, or do you want to spend $5 on a value meal? Of course, you want to spend $5. So deflation, lower prices, that's what we want. Unfortunately, this is, what we've come to as a result of inflation, as a result of the government printing so much money that now these companies have had to lower their prices substantially. And, what else is going on? McDonald's meal has faced competition from other chains, including Burger King, Wendy's, Taco Bell, and Starbucks, which have offered deals ranging between $3 to $5 as companies look to bring in value-conscious consumers in a highly competitive environment. So the joke, and not that it's actually a joke, but the joke here is, Starbucks, you get a cup of coffee for $5. You go to McDonald's, you get, fries, a drink, and a chicken sandwich or or a cheeseburger. And Starbucks, you literally get a little crappy cup of coffee. Or for $7, which I happen to like, you get a caramel frappuccino. And yes, it's a guilty pleasure. Yes, I know I'm getting ripped off when I buy it, but I can't seem to remake it at my house. So until I figure out how to make it at my house, I'm going to be stuck buying it once in a blue moon from there. By the way, what's your thought? Do you go to Burger King? Do you go to Wendy's? Do you go to Starbucks? Do you go to McDonald's? Would you buy a $1 menu item from Wendy's? I mean, it almost seems like, it might be cheap, but the price that you pay for your health by just eating that has got to more than offset, especially in the long term, the cost of the $1 menu. Anyway, humming along, let's cover other economic news that ties into this $5, right? This $5 footlong, this $5, Happy Meal, this $5 Burger King meal, whatever you're getting. Home evictions in the past year are up more than 15% compared with the period before COVID. And in the worst 5 cities, the eviction rate is up actually 30% higher than before the pandemic started. That's scary. And, a lot of this stems from 2020 when COVID hit. Whether someone is seeking to rent or buy a house, the housing costs have soared to an unprecedented territory, up 92% since the last presidential election. So, in 2020, it was about $1,000 or, $1,200, and now it's $2,100. And that's on average. My monthly mortgage, thankfully my house is almost paid off. Thankfully I have the cash to pay it off if I wanted to, is about $3,500 a month, but I have a 2.5% interest rate and I have a 15-year mortgage. And granted, out of that, $10,000 is what I pay in property taxes for 0.43 of an acre, which, I'm on Long Island. I take it on the chin, but the economics, thankfully support me being able to afford that. But what's absolutely crazy to me is a 1,700 square foot house, 3 small bedrooms, 1 bathroom, ranch, probably 0.25 of an acre, garage, is going for $550,000. I mean, that's absolutely crazy to me. And what else is going on? The banking industry, they have the commercial real estate explosion or collapse coming on. That would be another video for another day. Actually, I've filmed a video on that before. And in 1 week alone, this July 2024, U.S. banks closed 28 branches in just 1 week. What else is going on? Stop and Shop announced they will be closing 32 grocery stores, which, listen, good for them. They should. But basically, why? Shoppers are being squeezed by higher prices at the grocery store, with food prices experiencing modest upticks last month, according to the newest inflation report. I was at Stop and Shop a while ago, and I saw they were selling small bags of coffee for $15-20. And they're supposed to have thin margins, so either they're way overpaying or they're way overcharging, or a mix of both. But, basically, prices are too high and people can't afford it. And they're going to go to cheaper places like Sam's Club, like Costco, like Five Below, who also Five Below recently came out and is taking it on the chin as well. Anyway, Walgreens plans to shutter 2,000 locations out of their 8,600 stores, so approximately 25%. And just like Stop and Shop, less one part, they're going to focus on locations that aren't profitable, too close to others, that are too close to others, or struggling with theft. So, again, Walgreens didn't say they were suffering from theft issues, but I'm sure they are, especially in New York City. And, in certain cities or democratically led states, theft is allowed. So is squatting, which, by the way, I'd like to do a video on squatting, which squatters have rights, right? I'm being sarcastic about that, but if you'd like me to do a video on that or anything else, just leave a comment below, and, I'll absolutely do it if it's worth it. And, if the economy is so great under, the current administration, or, again, this has been a compound effect of just the government deficit going up and up and up, and the government getting bigger and bigger and bigger. Credit card debt surged to a record high in the fourth quarter. Even more troubling is a steep climb in the 90-day or longer delinquencies. So the savings rates has plunged, and credit card debt has surged, and people can't afford to pay it. The 90-day delinquency is way behind. And what else is going on? Auto insiders warn more Americans fall behind on car payments as repos soar 23%. That's a huge number. I actually did another video on the auto loan industry, the auto loan crisis, and how they've soared, through the roof. Repos are up. I think I did another video earlier in this year, actually. Please check it out. And what else? A good thing about all the repos is what? Deflation, right? Used car sale prices went down by 10%. So that's a good thing, right? Instead of having to spend $50,000, which is a joke, or a half a joke, I'm saying that in jest. But instead of spending $50,000 on a used car, now you get to pay, $45,000. That's crazy. And, these prices need to go down substantially for Americans to be able to afford it, especially with interest rates as high as they are. And the problem with raising interest rates is what? That once you do that, then the cost of everything is going to go back up because money is going to be cheaper. So you kind of don't get your cake, or you get your cake, but you don't get to eat it. I don't know what's better. I don't know what's worse. But for, financial strength and the right way to do it, we need higher interest rates. Anyway, Americans panic search give car back as subprime auto loan delinquencies erupts. Garbage deals, dealerships put customers in cars with $3,000 monthly payments. I don't even have words for that. I don't know what kind of car could even cost you that. I don't know who would do that. I don't know why they would do that. That's just absolutely crazy to me. And just, unbelievable. Listen, if you're rich and you want to go out and get a Ferrari, or, I don't even know, I don't even know these fancy cars, a fancy Porsche, I guess, or a Lamborghini, that should be costing you $3,000, but not your standard Escalade. So anyway, hopefully, let me know what your car payments are per month. I'd be curious to find out. And I'm not even going to touch on insurance rates exploding either. Anyway, what else has happened with our great healthy economy? And I'm going to move on to a few other things, and we're going to get into the solution here because I don't want to keep on hampering down on it. Credit card debt unexpectedly surges as card APR hits new all-time high. So, listen, this is just not the lower end consumer either, right? What is happening in the upper middle class, the middle class consumers as well? Polaris shares crash as high interest rates crush demand for ATVs. Or because how about they're broke, right? So Polaris, they make ATVs, UTVs, jet skis, and snowmobiles are in a deep freeze. Based on what? An increasingly cautious consumer led Polaris to report dismal second quarter results. Helen of Troy was another company that got crushed in the second quarter. They make, kitchen items and things of that nature. Leslie's pool shares crashes based on a weak consumer. Pool shares plunge, as full year profit forecast slides on a dive in consumer spending. In particular, the stock declined 9% after the company updated the market on the pool swimming season and promptly said new pool construction activity could be down by 15 to 20%. In addition, management now believes remodeling activity could decline by as much as 15% in 2024. Those are huge numbers there for the overall economy. And listen, that's upper middle class people who are installing in-ground pools. I thought about doing it this year. Unfortunately, I'm too busy. I'll probably do it next year, but I know in my head it's going to cost me $40,000 to $50,000. And when I do that, I plan on paying cash for it. I wouldn't go get a home equity loan of credit or a line of credit or refinance my house or anything. I would just pay cash, and that's the right way to do it, in my opinion. If you feel I'm wrong here, let me know. Hugo Boss. So again, Hugo Boss is a luxury German clothing manufacturer, but they slashed their full year outlook. They cited sliding demand for luxury goods due to persistent macroeconomic and geopolitical challenges and mounting headwinds across two key markets, the UK and China. Right? So not all is well. Who else is taking it on the chin? Swatch shares crashed the most in 4 years as profit plunged on China downturn. Who's Swatch Group? They include Omega, the beautiful watches, Blancpain, which I'm sure I'm pronouncing incorrectly, jeweler Harry Winston. They reported a stunning 70% plunge in operating profit and a 14.3% plunge in sales for the 6 months of the year compared with the same period last year. And, finally going back to the lower consumer, or the lower and middle, General Mills shares slide on dismal outlook sales amid consumer pullback. They make, Yoplait yogurt, they make Cheerios, they make Lucky Charms, and pretty much everything gross and unhealthy is what they make. I did a video on this, as a matter of fact. And it goes back to consumers have been cutting back on spending. Nike shares crash near COVID lows after warning sales slump is worsening. Walgreens shares crashed 20% on full year guidance cut, warns worse than expected consumer environment. And finally, one of the king of kings, the oligarchs, whatever you want to call it, Pepsi warns U.S. snack demand subdued as consumer slowdown worsens. And, literally all these headlines here or all these articles that I have printed out that I use to make these videos could almost in of itself make another video for me to form. So what's the solution here? Keep your costs down. Don't spend beyond your means. Save as much as you humanly can. Invest in foreign, at least I'm investing in foreign assets. Don't listen to me. I'm just some dude on the internet. Set up a side hustle. Is it fun? No. But is the time going to pass anyway? Yes. Work longer hours if you have to. Take overtime. Take a second job and, prepare. And listen, even if you don't need to, do it anyway. Who knows what opportunities could open for you, what's out there. Set up a .com, do something with drop shipping. And, most importantly, as a person, just do the next right thing. So if you found this video helpful and informative, please be sure to like, comment, and subscribe. It means the world to me, and hope you have a great rest of the day. Thanks so much.